Hello friends, welcome back to my channel and thanks for stopping by. Today I thought I'd start off the video by evaluating some of my last month's stock pick, tracking how they're doing today. So back in April, I said to myself, Macmillan Shakespeare, Endeavour Group and Tyro is a buy. And I'll link my April video at the top of the screen because that particular video goes through a little bit more of why it is a buy. So let's have a look at how this stock has performed over that past month. So we'll start with Macmillan Shakespeare. It's a Surrey packaging firm. We called it around, I believe, over here. As you can see, maybe I just do the year to date. We called around about here, $13, $14. And over the past month, it's risen about 20% to about $16. At the moment, the dividend yield is still 9.5%, which is quite attractive. I think when we called it, it was about 11%. So, of course, much more attractive then. Um, the next stock that I said to myself is a buy is Endeavour Group. Unlike or uncomparable to Macmillan Shakespeare, it has done a modest gain of about 7 to 8% since we called it. And as you can see, we bought some here. So we called around 380. Now it's about 420. Still an attractive dividend yield of 5%. And the last stock, which doesn't pay dividend, is Tyro. Tyro is a payment company or facilitating payment company, and we called around about 62 cents, and now it's 92 cents. Didn't move today, but that's a whopping 40% gain over the last month. So definitely for traders and investors, this share should be on your watch list. All right. So, what do I think now of these three shares? Well, Macmillan Shakespeare, I think, is still a very much a buy. It has a high dividend yield compared to the counterpart. Another big company, SIQ, Smart Group. Um, both very similar businesses, but Macmillan Shakespeare pays a lot more dividend. And I do believe for the next couple of years, the dividend will be quite sustainable. In terms of Endeavour Group, very similar reasons. But with this particular stock, I think the worthy note is that it has two sides of this business. One's a retail, which is the network of liquor stores, primarily Dan Murphy BWS brands. Um, that is the attractive side of the business for me. And that's why I actually bought this particular stock. The other side of the business is the hotel business, which owns gambling or gaming machine licenses. But I think if there's something to watch for, which there's no news at the moment, but is the regulatory changes, surrounding those gaming. And of course, the last stock, which I want to talk a little bit more about, is Tyro. Tyro, as you can see, as mentioned before, it's a payment facilitator. As of financial year 22, it has over 110,000 merchant terminals, which makes it the fifth largest merchant supplier. And if we take a closer look at recent day at the end of the 2024, which is the first half of the 25 financial year, it has 73,000 merchant, which is an increase of 10,000. So that's basically 10,000 businesses, small, medium businesses joining Tyro because of the competitive pricing. Um, so that's definitely a good stock to not only watch if you're a trader, but also potentially for long-term investors. But I think there is something worthy to sort of take note when it comes to Tyro and investing in Tyro. I think the biggest threat for this company, in my opinion, is the big fintechs of US and China. If you ever holidayed in China previously, you might know that the whole country lives and sleeps and breathes the WeChat Pay and Alipay. WeChat is owned by Tencent and Alipay is owned by Alibaba. So I'll just run a quick clip to show you what it looks like in China when they make payments, and then probably we will get some insights.
If you want to roam around and explore, try a shared bike. Just use the scan function in Alipay and scan the QR code on bike like this.
That's it. So in all businesses in China, most actually, I think it's all businesses, they have these QR codes. So you just stick your phone camera up to it. It takes that not picture, but it scans a QR code, and then you request payment, and then you pay, and that's pretty much it. So if you see that those type of technology coming, I think it's time to reconsider. Obviously, if it's still a good idea to have Tyro on your books. On this page, as you can see, Apple, which is a US, of course, company, um, it has, if you have seen it before, um, sending money across iMessages. So, of course, that requires potentially Apple to be like a bank, to have a ADI, which is the authorized deposit taking institution. But if it does takes that step in Australia to become that kind of institution, not only obviously a technology company, but also a financial company, hence fintech, then I always say definitely if you see any of that coming, beware. All right, on to my next segment. I thought I'd start talking about mining shares. Why? Well, I think they're actually very cheap at the moment. You just need to look at the PE ratio for these three companies, and you'll find it to be very attractive. It's also attractive because I think they do have future growth perspectives, and due to the current market's narratives of a mounting recession and also Trump tariff, I think they are partially down because of those reasons. Of course, in this video, I'll explore a little bit more, but just to put it out there that mining shares, they are very essential. Infrastructure, technology, energy production, transportation, manufacturing, and I think the list will keep going. Just look around you. Um, and year to date, you can see BHP down 3%, FMG 10%, and nickel industries nearly 25%. Before I obviously get into BHP's business, I thought I'd just quickly mention this point that these stocks are not spectacularly interesting. They're really just digging things out of the ground and selling it. So it's nothing like AI story, Nvidia, Facebook, all those Silicon Valley technology companies. Um, this is more like Warren Buffett's investment in Occidental Petroleum. Why do I like this stuff? Why does people like these things in their portfolio? Because it's stable. These are the things that the world needs to function. Just to look around you and all the construction at the moment happening in Australia, there's a lot of big projects, mega project for transport, infrastructure expansion. They are all requiring these things that you see on this particular slide. Ship manufacturing, manufacturing for machinery, technology, anything magnets. So basically, what is in your room around you, this is the modern civilization or the human civilization basis. Of course, if we look at copper, another big part of BHP's business, anything electrical, electrical appliances, EV battery is a big one. Copper is also crucial for renewable energy like solar panel wiring. They need copper. Um, so this is a good business. It's a diversified business, as you can see. So therefore, I think this is a buy when it's down. FMG, the specialist in iron ore mining. Of course, it's tumbled in recent times because there's a lot of news about a slowing China or news that because of their population declining very similar to Japan, the birth rate is down. And the death rate obviously continues to grow. It's a country or it's a dying country. That narrative is there. And not only that, you've seen a lot of stories about ghost cities and overbuilding and trying to pump out these huge cities where there's a lot of infrastructure, a lot of buildings, a lot of material thrown into basically a city that's just completely empty. And I think it gives a lot of the investors the impression that, there's oversupply of housing. They don't need any housing anymore. So therefore, why continue to invest in these companies? Nickel industry is obviously is a little bit different. It focuses on nickel, and nickel is very important for EV battery production. Over the last year, the risk here is that the declining price of nickel. But I hope and I do think it is a temporarily a little bit of a blip, um, because I do think that electricity car or electric car will continue to overpower fossil fuel cars. And I think that trend will continue as China continue to expand and make slicker cars through BYD, Geely, Zeekr, Xpeng, all those brands that are coming. So the timeline, well, at the moment, I do think we're in the uncertainty period. There's still a lot of narratives, a lot of story, but I just think that domestically we need these raw materials. Internationally, they're not going to drop off the demand. China is not slowing down um, at all, and I think that's why in the long term, these companies will continue to grow. Of course, in the temporary, what we need to consider is the Aussie dollar. As you can see, the Aussie dollar is targeted to appreciate by the year end 2025. I'm not sure if the reason is because of a strong economy making it our dollar expensive. I think it's mainly driven because of the US economy. That's why it's pushing our dollars a little bit higher. But that does have significant indications for our exports, and iron ore does get exported a lot. So hopefully it doesn't go way up and push some of the commodity prices of our iron ore out of reach of some of the country that needs it. I'll come back to China. Uh, Tariff. I don't think the risk is there anymore, but we do have to take care. It is Donald Trump. Looking at closely China, its real estate is down 10% in Q1 2025. This is a big reason I think where our stock for energy and iron ore and all mining commodity is down. This has a big part of it. But if you look at their industry, it's still up 7.7 year on year. Um, the recent Trump tariff figure has yet to be shown, but again, that is a temporary thing, as we all can see what's happening with the tariff. Trade, I wrote unknown, but I really like to change that to known. And what we do know is, on the news, you can have a look at this the BRIC nations, that's like India, Russia, they're forming with China in terms of a bit of a sort of free trade agreement countries. So that's obviously happening with Chinese trades. But not only that, if you look at some of the news, China is aggressively trying to push into the South American and South African nations. So again, if there's obviously raw material needs, our the companies that's mentioned today definitely is in the right position. The other thing that we need to know is China is a story about urbanization. I don't believe the Chinese would always want to be an exporter because when you're an exporter, what will happen in your country is, less clean, dirty, and pollution. So I do think that Chinese want to move. As you can see, this is, I think, the 1950s Shanghai. This is currently, but I do think it will become something futuristic, and I do think the Chinese want that as well. So, as part of their modernization, as part of their infrastructure expansion and overall productivity, they do continue to need these raw materials. Okay, that's it, guys. End of the video. And if you liked the video and found the content useful, please give it a like. I do update on a regular basis, so also hit that subscribe button whilst you're at it. It is free after all, and it does help out my channel to continue to grow. Thanks all. See you all next week. See ya.